The copper rush. If you get a few glasses of scotch into a wealthy fund manager, they'll tell you that one of the key things they look for in an investment opportunity is something called a pure play. Pure play exposure means that investment's performance is determined by a sole characteristic. The financial returns associated with a pure play investment are not diluted by other unwanted characteristics. Take a company like General Electric. GE derives its revenue from power, appliances, renewable energy, finance, aviation, and even hydrocarbons. A company like GE is known as a conglomerate. With such a diverse revenue generation capability, it would be nearly impossible to find a single return determining characteristic or risk factor for GE. They have multiple. On the other hand, a specialized commodity producer's return performance is going to be guided primarily on the revenues derived from that single commodity. Assuming management meets the expectations, the economic return should be guided by the commodity price. This is an example of a pure play investment. Pick the right commodity and you give yourself the best undiluted chance of making a big score. Copper tension and demand. Identifying an early trend in the commodity space can unlock vast fortunes, and this is why I love the commodity business. The biggest trend I see in the investment space today is global decarbonization, with the eventual balance sheet reporting of carbon footprints and liabilities of all publicly listed companies. But there are a few pure play ways to get exposure. You might think you need to be invested in some element with an unpronounceable name far down the periodic table, which is only located in a tiny corner of some corrupt government on the planet. But that's not the case. Did you know that the average generator in a wind turbine needs almost 2,000 pounds of copper? Or that the average electric car requires 150 pounds of copper? Solar panel, power lines, high efficiency laundry machines, you name it, they all need copper, and a lot of it. By 2030, the market is poised to grow to over 30 million tons of copper consumption annually, representing more than 30% growth through the decade. That's the chart you're looking right now, the projected copper demand. Copper represents a fantastic way to get pure play exposure to economic growth and global electrification while transitioning to a decarbonized world. Copper prices are booming. I've written many times in the past, you can click any link here, to show that in order for copper supply to increase, prices would need to go up substantially. The world needs a lot of copper, but it won't get it for $3 a pound. This is coming to fruition now. Copper prices have been rapidly increasing since the pandemic began in March of 2020 and are hovering just under all-time highs today. Take a look at the chart of copper prices today. I do believe copper prices in the long term can still rise even higher. It seems like a textbook setup for long-term demand growth coupled with a tight supply outlook. Copper prices are rising, but stock valuations are not. You would expect that with prices near all-time highs, that valuations would be equally rich. That is not the case right now. The chart you're looking at right now shows the forward-looking estimates on a rolling basis for EV to EBITDA. That stands for earnings before interest, taxes, depreciation, and amortization relative to EV, the enterprise value. When the EV to EBITDA ratio is high, this can demonstrate a company or sector is overvalued relative to its peers. When the EV to EBITDA ratio is low, it can show that a company or sector is undervalued relative to its peers. So let's look at the math, because that's why you're here. You want me to do the calculations and you to judge. So here's the copper sector valuations. This is 1 year forward EV to EBITDA. That's where it is right now, and that's the last 10 years. You can see that in 2021, the market was pricing in a lot of growth to the sector because share prices had climbed much higher than expected cash flows. Today, those expectations have been revised lower, and the market is projecting lower prices and less growth. This comes at a time when perhaps more clear than any time in the past decade that the world is going to need a lot more copper. Now I'm going to take a sidestep. Be aware of the peanut gallery analysis. Now this is a total side point, but I want to warn everyone interested in the commodity business about what I call the peanut gallery. Those are the people who have opinions, whether paid for by their masters or their own, but are unblemished with success. Simply put, they have zero tangible success in actually building anything of value in the commodity space. So, what has Marin Katusa done? Just Google the deals I've been part of from inception to production, cash flow, and buyout. In the copper space specifically, I was one of the original 4 founding directors in 2006 of Copper Mountain. By 2011, the company eventually became the 3rd largest copper mine in Canada. Producing copper mine, that is. I was incredibly fortunate to sit beside the legendary Jim O'Rourke for over 13 years and watch and learn how a master goes about building a mine. From design to exploration to permitting to dealing with all stakeholders to building the mine on time and budget. Doing is so much more of a learning experience than reading and judging. In the early years of the company, I was the largest individual investor in the company, and I learned firsthand the difference between skin in the game and what I call the paid suits. Always bet on people with the skin in the game. So when you read some analysis or opinions, ask yourself, what has this person actually done in the space that they have an opinion in? Now back to my main narrative. The copper's crux, copper supply. It is getting harder and harder to discover and develop new world-class mines. Making the situation even more challenging is that many of the world's largest copper mines are getting older, mining lower grades, are having an increase in impurities, the nasties that the smelter doesn't want, and are located in politically risky jurisdictions. This trifecta sets the stage for a long-term boom in copper prices. Skate to where the puck, and you should think the puck is money, is going. Right now, my team is laser focused on the decarbonization investments. Renewable energy, electric vehicles, and carbon offsets are all major roles. I believe governments around the world are going to tax the high polluters and use that cash to subsidize the transition to greener economies. Trillions of dollars are going to be invested in the decarbonization sector over the coming decades, and carbonomics are going to become a pillar of every single industry. If you want to get an independent, unfiltered opinion and a piece of the action, consider becoming a subscriber to the KRO, which is Katusa's Resource Opportunities. The commodities and carbon bull market haven't even started, but for many sitting on the fence, it will be late very soon. Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.